Hello, traders. How are you doing? Broadcasting live from Mexico City. Here is 8 a.m. in the morning, 13 hours GMT time sharp. Today is Wednesday, August the 17th, 2016, and my name is Alberto Alvarado. And welcome to my webinar here through binary.com called WoW Trades. I would like to extend a sincere thanks for binary.com for allowing me to approach my insights on the markets to all of you. And for the ones that are not aware what WoW Trades stands for, WoW it stands for week over week trades. Since every week I broadcast here, same time, same place. My insights in the markets. Every first Thursday of the month, I broadcast on a Spanish one for the ones that are interested in that. So, I believe it's time to start, and here we go. A little bit about me, the picture there, it's me, myself. As you can see, my name is Alberto Alvarado. I'm a self-trader from Mexico City. Was born here, trading from here for more than 10 years of experience. I started trading 2005 with an inherited money of my grandfather, and it only took me 1 month to evaporate that money, but I got hooked to the markets because I realized that was something that I wanted to do for the rest of my life. So I took seriously my self-education on the markets, and more or less in 2007, I had a chance to start harvesting some of the profits of my efforts, and just to see my money evaporate again in the financial crisis of 2008. And I had to decide to quit or leave it, quit it or continuing. I decided to continue, but I was facing the need of restarting from scratch everything. And I decided to take a shot on including the intuitional and emotional elements to my trading. This must be understood, not that I take decisions based on hunch feelings, on instincts, but on an overall intuitional thing that's conformed by a lot of factors, the emotional, the rational, the technical analysis, fundamental analysis. But that ended up working very well for myself. And some of that you will be able to see how that works in my webinars, how I explain how I understand the markets. I also use very typical technical analysis tools like the MACD, Stochastics, and RSI because I don't believe in custom indicators or robot systems indicators that you have to pay for, because my ultimate belief in the markets is that the one that needs to adapt to them is you yourself and your understanding and not your tools. You should be able to trade with the same tools every time, and the one changing the approach and the understanding is you. That is why I said that the Holy Grail is not any indicator, but you yourself. So I am a stronger believer of that. I have lived that in my own life, so that's the message that I send. So, I believe it's time to start. The value-added services section is based exclusively on demand. I'm still figuring out what kind of services I could be offering, but I would like to wait for an outcry demand. That means that the traders here, after having the opportunity to test and come to the webinars and see that the information delivered here actually works, they will start spontaneously asking for some other kind of services. So that is why this is not like my priority. Only if people start asking for such services, I will be more than glad to help and try to approach those services to all of you. I'm going to talk about this at the end of the webinar. This shop section that was recently added by binary.com is actually the way I could approach that to you, but I will explain it at the ending of the webinar. But in the meanwhile, what you can do is to go to my YouTube personal channel, that it's completely free as these webinars. Just go there and look for in your YouTube this IIBB's Trading Room channel, and this will show up, and click on subscribe. Why I ask you this? Because as you know, the markets change every time. You really don't have a way to know that something will stay the way it is 1 week or not even 1 hour. So waiting for in a weekly basis, waiting for the updates could be not positive overall if we decided to open a trade. It requires to be updated at least in a daily basis. So there is where this is my communication channel with all of you. I have been using that some trades that we had open. If I decide to open a trade or to close a trade in advance, there is where you will receive that information. And because it would be very sad that a profitable trade becomes a loser one just because 1 week had to pass to receive the updates. So be sure and ensure yourself to go and subscribe there. I'm not updating that channel every day, only if it's necessary and if I need to update something. So don't believe that I will be spamming you with stuff. So go there and subscribe. It has shown to be already a good tool because I have already had the opportunity to use it to let you know in advance as a switch in bias or closing a trade, opening a trade, etc. So, well, there it is. Go there and subscribe. Today's agenda, it's a very, very interesting one. We will be reviewing not one highlight of fundamentals, but two highlights. And it's not from the last week, it's from today, some hours ago, and yesterday, about the UK economy. It's very interesting overall because of the conjunction of factors that we are facing in the pound. Besides its fundamentals, we are sitting on a multi-decade support that it's being shown strength to prove that maybe it will work to stop the selling sentiment after Brexit, etc., etc. We will review that in some moments. The second point is the price action opportunities that arise after the analysis of the fundamental and fundamental dynamic levels that you are used to see in my webinars. The third one is the live trades, that if we find a profitable trading opportunity that we could maybe comment here, there is where we're comment there. The four, review adjustment of previous week trades. We don't have any current open trades, so that we will skip that. And the fifth point is questions and answers, so feel free if you have a question to drop in the chat box. Well, the first fundamental highlight is the UK PPY. And as you can see here, actually yesterday's data by the UK economy was really outstanding. That is why I'm not only showing you the PPI data. We had the CPI year over year. As you can see, it was better than expected. It was expected 0.5, it was 0.6. But this is the very, very good one. The PPI input month over month. It was expected at 0.6%, and we have a 3.3%. So that is like 500% of above expectations numbers. So the markets realized that and reacted accordingly to that. We're going to review that. The other better than expected data was the RPI year over year, the 1.9, but we were expecting the 1.7. Core CPI was aligned with expectations, HPI was slightly above, and PPI was aligned. But as you can see, the outstanding one is the 3.3% versus the 0.6% expected. That's 500% better, at least of what it was expected. So that is why we're going to review that. It's had a tremendous impact in the markets. Just to, well, for the ones that are not really knowing what PPI is about, just in very short words, the PPI input month over month measures the change in the price of goods and raw materials purchased by manufacturers. It's considered a leading indicator because for the consumer inflation, because when manufacturers pay more for goods, the higher costs are usually passed on to the consumer. So actually having this 500% above the expectations actually raised the questions on that maybe the Bank of England will be sooner than later switch the the idea of cutting rates in the UK. I mean, having a five. This is like the labor data we had like 2 months ago, month and a half ago, but it was the best of the latest 10 years. It takes a lot to have those kind of numbers. And actually having this 500% above expectations is something that needs and will start to be considered seriously by the participants in the future. Because if we start seeing that this becomes actually a trend, the most likely things that the Bank of England will have to rethink, maybe not cutting rates anymore, but even rising rates in the next maybe 6 months. I believe that this kind of data actually will put the Bank of England in Fed mode. What I mean with Fed mode, well, if you remember, the Fed has been very, very cautious on increasing the rates. We only had one last year, December, and could be probable to have one this year or even wait for January, February, or something like that. They really want to be sure that they are not that they are timing the hiking the rates in a good way. I believe that the Bank of England, in any case that we continue receiving this kind of very good news, they will be no tempted to shrink the rates even more. Maybe not rising them immediately, but yes, for the ones that have been following for quite some time, you already know that I held the idea, and I still hold the idea that the best thing that could happen for the UK was the Brexit. That was not obvious at the beginning. It's not obvious at the beginning, but actually in the overall, in the long term, I believe this is the best thing. Why? Because I've always held the idea that the UK is so strong that they could handle things not belonging to that euro concept. But well, there's still talk in the market that maybe they won't even pull the trigger to actually go outside the European Union, etc. What I believe is that this kind of data will encourage anybody to take that decision. Because actually everybody was betting that after the Brexit decision, the UK economy could to simply collapse and to be crushed. And it's actually the opposite. We had a very bad data 2 weeks ago, but regarding to the labor market's been so strong in the UK, not matter after Brexit, and even this PPI thinks is letting us know that demand is increasing in the UK and the consumer is healthy. That is why the manufacturers are paying more because the demand has been increasing. There are some other factors that are playing with in that having to pay more for the manufacturers, but well, actually the market reacted very positively to this, and we're going to review that. The second one is the UK claimant count change for the ones. I believe that this is way more popular, so usually people know more or less what this means. This measures the change in the number of people claiming unemployment-related benefits during the previous month. This has to do with unemployment. Okay, if this is higher than expected, that means that we are not having employment health. That is why this is the one indicating that the labor market is healthy, and that last time that we had the best labor data in the 10-year in the latest 10 years was not a coincidence. We are still having data showing and throwing the conviction that the labor market in the UK is not only good, is one of the best in the world. Actually, I don't think that there is nobody in the European Union that is holding these kind of numbers. So that is why Brexit was not economically, it's not a disaster. Actually, it could even benefit the UK. That's what I believe, because these kind of numbers, if they keep belonging to the euro zone, since the eurozone, the leaders have shown that they are not up to the challenge of knowing how to handle the economical problems after 2008, that could even lag, make the UK economy to lag and to underperform, just because they are trying to, if they try to go as a block, they all need to be more or less at the same speed. But the UK is showing that it's going faster and faster and faster. So the UK, I believe that maybe the people were that voted for Brexit, they didn't vote for this reason, but they ended up voting for something that will be beneficial in the future. That's what I believe, of course. Everybody can believe whatever they want, but this is my conviction. And the numbers have been showing us that so far. So let's see what happens. And well, the other part of this, why you should care about this number is because although it's generally viewed as a lag indicator, number of unemployment people is an important signal of an overall economic health, because the consumer spending is highly correlated with labor market conditions. Plain and simple. If you have work, if you have a good job, if you have a job, you consume. If you don't have a job, you don't consume because you don't have anything or feel confidence to spend, right? Unemployment is also a major consideration for those steering the country's monetary policy. So yesterday we had a very, very good indication that maybe we will start seeing inflation in the UK. That means a healthy inflation. That means that the consuming is doing all right. Then we have a labor market confirming that number. So yeah, actually, it would be just a matter of some months that you will start seeing an important increase in inflation, and that will push maybe the Bank of England just to take this latest rate cut that they did, maybe just to say, okay, we're going to increase it now. It was a wise decision to wait the first time not to touch the rates because of the fears of the market. Then the second, when they took the decision to slash the rates, corresponded to how things are starting to show up in Asia, in Japan, in Australia, etc. We explained that during another webinar here. And actually, it's still a good decision because I am expecting the tsunami shock after 2008 crisis by this stage of the year and the next year. But of course, not every country will suffer those same consequences in the same way. And I believe that the UK will be one of the least affected by that tsunami economic shock after 2008 because of these numbers. But it was a wise thing to take it with a more conservative approach and just wait. But these numbers are terrific. These are so good numbers that actually they revived the bullishness. I'm a long-term bull for the pound, for the ones that already know that. And yes, these numbers are not disappointing at all. So this is why all these news are very important for the latest price action that we're going to analyze. Here is the latest year of that claimant count change using the dynamic fundamental levels. This is the latest years. Have you seen the trend has been set to the upside? That means that according to these models, actually you should be having more and more unemployment. But look at this. It was not only, and actually this was a very good data also. Let me just check it. We expected 5.2 thousand people claiming for some kind of aid in the United Kingdom related to unemployment, but actually we didn't have that. We had a negative number. So I don't know. This is so good number that it should more or less it should have been like in here where this mid band is, if I'm not wrong, a little bit above. That would have justified, and that's why the markets expected that, because there were so much hype by some pessimistic people that are still holding the idea that after Brexit, the UK economy was going to be crushed. That the only way to justify that was to expect the numbers more or less as they expected there here. But it was not only below this midband. It was 500% better than expected. Sorry, this is not the 100% better than expected. This was the latest one. But it's pretty much the same thing, right? If you didn't have, we were expecting the 5 positive, and we didn't have that positive, but negative. We were having like what 200% outperforming number. So it's really, really good also. So, well, here it is where it should have been what it was expected, but it was below and way below expectations. And you can measure these fundamental dynamic levels. This is the shortest distance. Well, this is the shortest one. After having this very, very good number in the UK employment count change, actually the market started to deteriorate. But now, after look at this, this is after Brexit. This number was after Brexit. It was almost zero. It was more or less at this midband. But as you can see, the steepness of this should have been like in here. But look at this. We had a trend to the downside here, here, and here. It's the shortest distance after that, after this one. Okay? So, actually, this is why the markets care a lot, because I don't know what's the number expected now. We should wait to see the adjustments of the expected numbers for the next month. But look at this, the band is even to the upside. If we have the most likely things that we won't face the next month, any number close to this. So it will be, it's almost for certain or almost for sure. This is not 100%. That's what I expect, that the number will be below this line again. And that will have a positive effect, even if it's not negative. But in the meanwhile, it's below this. I mean, this is a tremendous number because people were expecting a whole meltdown of the UK economy. But if we have, for example, a kind of negative number, let's say that we could face half of it, more or less here. But the distance would be more or less the same. What I really expect is that the distance from these two levels, the lower Bollinger Band of these fundamental dynamic levels, and actually the number will be the same one here at least. So what I believe that the next month we're going to have again a negative number, that it's in this case positive. So yes, this will exacerbate the fact that we are testing a multi-decade support in pound. The 1.3 and the 1.2 to the 1.3 area, it's a multi-decade support. So this data is helping the bulls who are opening very long-term trades here. This is the justification that they need to start increasing the risks to the upside. Okay, now meaning to start increasing their positions to the upside. Having these kind of numbers is something that nobody expected after a thing called Brexit. This was almost impossible to visualize. But well, it's happening and it's very good for the UK then. Well, how this have been reflected in the pound? So we can analyze, we can see some trading opportunities in the short term for this thing. This is let me tell you exactly where these numbers come from. This is from July. This is more or less the beginnings of July. So this again, the blue ones. These bands are the fundamental dynamic levels that I have been talking about. As you can see now, the price, after having those very, very good prices, rose above this mid band, and it's getting close to the 1.3. That it's if you're a short-term trader, this is actually a resistance. If you are a long-term trader, from the 1.3, everything below the 1.3 up to the 1.2 is a long-term support. But this data is making them stronger. So at those long-term traders, long-term hedge funds, institutions, etc. So don't be surprised if at some point these guys that are the ones that really move the markets in the long term, the position that they will start increasing after this moments will be able to break this 1.3. As you've been aware, I've been explaining that it takes a lot for these fundamental resistance lines to be broken immediately. It's almost impossible unless we are facing a bubble explosion or a financial crisis like 2008. But this kind of numbers are considering a lot of factors. As you can see, this band, for example, stop this price to continue going up, and then again here. And if it touches the 1.3, besides being a psychological resistance, it could make the price maybe to hesitate. But what we need to consider is that watching this chart means that we are in a not only psychological short-term resistance, but besides, we are holding this this fundamental resistance here. So if you decide to long now, this is why the opportunity for the bulls was like in here, not here, because here it will take some time for the volumes to really start shaping this that was to the downside, that is to the downside, to start shaping it to the upside. It will take that the market stabilizes here, moves over the 1.3 and then jumps to the 128. And having that, as you can see, the more the prices resist to touch this line again, the 1.2 now, the more time it resists, even if it gets lower from the 1.3 to the 1.29 and then back up and then now, the more it gets, the more this will start shaping to the upside. So that is why even having this good number could take some time to be reflected convincingly in the markets. And besides, this is something that the long-term traders will be happy with, because that will allow them actually to start loading the vote with huge loads of pound without maybe being undetected. So yeah, we are like in a position where mid and short-term traders will be tempted to short, and the longer-term ones are going to be the ones absorbing all that selling spree. So the market will start in an equilibrium now. I believe that the market should hover from the 1.3 to 128, something like that, maybe this next month. But all depends on what happens today after the FOMC minutes. That will be the ultimate thing that we have to review to say, okay, yes, this will shape to the upside, so let's start looking for longing opportunities, or in the other hand, if we're going to stage in a range bound. I believe that the risks now on the pound are for the upside or range bound. I really see that the very sentiment simply evaporated. We are holding the long-term, we're testing a long-term multi-decade support now. With this kind of fundamental data, you will need, I don't know what, to break that sentiment that the ones really buying at these levels are doing the right way. I don't know what needs to happen to convince them that they got it completely wrong. This is only assuming of that same price action, as you can see, only to demonstrate. And I always say this here, these fundamental dynamic levels, I show them to you so you have context to know what you're doing. Either if you are longing this, or if you disagree with me and you short it, or whatever you do, you at least know exactly your risks. You know that even though this latest fundamental data, actually, if you look back to July, this actually still goes to the downside. But in any case that you decide to long, you need to consider that you will face, the more time it passes, more resistance here. So if the price doesn't manage to do something really quickly at this level, the most likely thing that this line will start pushing the price gradually to the upside and make it hover in the 129, 1/3, 1.3. The 1.2 is the one, it was like my reference level that needed to be touched by the pound to actually have momentum to try to close that weekend gap after Brexit at 137, if you remember. But actually things changed because we got to the 128.50, very close to the 128. But after having this very good data, I don't think that the 128 will be touched. So that's a reference, okay? The reference is besides this one. This is the 128, and this midband, it's still above the 128. If you were a bull, it would be and I mean not a short-term bull, because this approach doesn't work for short-termers. Okay, this only fundamental approach. In the live analysis, we did another kind of analysis. We do another kind of analysis that helps short-term traders. But if you are really into fundamental trading, having the 1.28, that it's the price, the lowest price after Brexit, the lowest price that the market reached after Brexit, it should be the land in the sand for the bulls. So they will do whatever it takes to keep it above this line. So as you can see, 128 is the land in the sand, at least psychological. If the market manages to to touch the 128, that means that something is not working and something changed. That's uh, that's why I believe that in the next weeks or even months, we're going to face tough conditions for trading the pound. It will be caught in a very, very tight band, the 130, the 128, and maybe above the 122. The risk here is that we see this band with time touching the 1.28. That means that mid band that signals the division between bulls and bears, because the more time the price stays above this mid band, it will start shaping it to the upside gradually. But this is like a very no-brainer support. In any case that this gets to the 128, and we're still getting not that convincing information to the upside on the pound, then the risks to the downside will suddenly increase, because that's like the signal for the fundamental traders. If the 128, this midband touches the 128, then that means that in order to make continue this price to go higher, it needs to retest the previous low, the lowest point after Brexit. And that could have the power to neutralize completely the bulls again. So this is the bulls moment. But some conditions that are very tough needs to be preserved. Like, for example, not having the 1.28 touched. They only have this very tight range on very low volatility. And they need to be able to keep the price between those prices, 130, 128, 129, sorry. So as you can see, all the volatility is higher. So it will be very tough conditions. But what I believe is that this latest fundamental thing will help a lot to convince the bulls to start buying at every dip. This is another hint. The fundamental bulls will buy every dip above 128. You know already this line. So go do your own analysis, and if you're a bull here, and if you are convinced that actually this kind of numbers and that Brexit was a good thing for the UK, you will start seeing you are expecting to have this kind of numbers in the next month and the next month, etc. The other risky thing is that Fed decision that could traditionally that should push the price lower here. I don't think so, because this already the pound devaluated 10% after Brexit, so it's oversold. So maybe having the Fed hiking the rates this year shouldn't have this effect. Overall, we continue having 500% deviations favorably for the United Kingdom economy. Okay, so well, these are some hints for all of you that decide to trade maybe to the upside, where more or less your long should be positioned, and if you to open if when you open trades on binary.com, this information is actually even more useful, because this gives you an idea of the time window that you need to use. If you're actually wanting to have in the next weeks and months a profitable trade using binary options for binary.com, actually you will face, you need to find a place in the dip to buy and give that price a good time to breathe. Because as you can see, if you're a bull, this should hover here like for weeks. So maybe if you're betting 1 hour, maybe you will ultimately be correct. But if in the 1 hour, maybe it won't be good enough moment, because again, we're trapped in the 1.3 and 129. Unless you're very good at it, pinpointing and detecting the exact dip, you can do that. But I'm addressing also the newbie traders. If you really want to try a bull trade here, give it a time span of maybe of weeks, not only 2 days or 3 days. So that's for all of you that find this information useful. This is I zoom in. Well, this is the same thing. The price is close to the 1.3. Again, here the band is above the 128. Here it's a short-term one, and you can see that actually 1.2 is touched here in 2 or 3 days. But since this is very from July 24, maybe this is not a good enough time span to analyze. Yeah, I'm just using this in this case to show you how good this resistance work. So if you are buying, don't be surprised to have then the price jumping to the 129 and then retesting the 130 and then the 129 again. This is the idea of this kind of analysis. Because maybe if you see that the price is rejected again and again after the 1.3, maybe you could consider that it's a no-brainer short movement. No, actually, this latest data, according to the reading in the fundamental dynamic levels, indicate you that the more it tests the 1.3, actually, it will increase the probabilities that in the next weeks or months we could have the 137 closed. Closing that gap is crucial for the bulls in the pound. They didn't make it after the 128. We had the price getting to 128. So they are actually finding, and they are serious about finding a second chance to retry closing that gap, as you can see. Well, this is even a shorter time frame, from August 1, more or less. You can see how this fundamental level, it's already shaped to the upside. And again, now look where the support is the 1.3. Look where this lower band is a 1.29. That is why this is the trap. This is a 1.3 between the 129. In my opinion, will take some time for the price to be to break those resistances. It would take maybe, I don't know, maybe 1 month, 2 months. So we will, in the live trade analysis, we will figure out if you can profit opening a trade in binary.com using those bands. If you are not used to that, if you're only used to the bull and bear binary option, binary.com offers you a chance to profit from this kind of insights. I will show them to you in a moment. Well, this is how it looks like after this good data. This is completely relevant, fundamentally relevant. But as you can see, after having yesterday, the latest since the last, let's say, swing to the downside, this is how it looks. But it's only a reference. This is useless for trading. Here is a daily chart in the cable. Actually, we have two figures. This, we could call it a triangle. This is the Bank of England decision. It broke it to the downside. But then we at the 120 and the 129, we were having a very strange price action that now we know that price action had not only to do with the price is retesting a multi-decade support, but yes, there were participants that were kind of anticipating that we could face a very good number this week, and they started longing here. Even though the volumes here are not very relevant, but at least the volumes are above the average. You can see the volumes here, even after Brexit. This is Brexit candle. The volumes are keeping above the average of this. If you remember, I explained here that this sudden rise in volume was because we received here the best labor data in the latest 10 years. So that really made the flows of money getting into the markets again. And it's very important to see the volumes above this average before that number. Why? Because that will give you the volume signal that actually the markets are active, eyeing, and looking for something interesting, something important here. While the volumes are above that average, that means that everything that happened after the best labor data of the latest 10 years, after that, everything is to be considered seriously. And as you can see, not even Brexit was that big deal. So, well, we have this triangle that was broken, and then we have this descending channel, we could call it that way. And look how this candle had everything to do with this price action. When we connect these two levels, well, we formed a triangle that broke to the downside. Okay, actually, we retested the first take profit target of that is this level. Actually, this level is the one working for this support zone. Now the price is retesting this. So that is why, again, we will have a fight in the 130 to the 129 because a lot of levels are converging here. And as you can see, this level is considered by two trend lines. This one that indicated that when it was broken to the downside, it indicated us accurately where it was really broken, and this one that is working as a support. So this level that it's very close to the 1.3 is crucial. So again, you have psychological level, fundamental dynamic level, you have price action level, you have chartist pattern levels here fighting. So don't, if you are a bull, don't expect to have a 3, 4, 500% pip trade in 1 week. Or if you're a bear, don't expect to have the 128 touched in 1 week. We are actually having a serious fight between bears and bulls, where you sit in the volumes. Above the average volumes, even before and after Brexit. So everything will get very interesting now. Go to the live analysis. Let's go to the charts. Well, these are the trend lines that I've been showing to you. Here you have a closer look because I zoomed in the charts a little bit. Here are the volumes. This red line that you see here is before Brexit, we had a very low activity on pound, as you can see here. Then we had the Brexit, and we just had that spike above. So even though we had this tremendous movement to the downside, actually there was not a lot of volumes. The volumes increased after having the best labor data in the latest 10 years in the pound. Okay, so while the volumes stay above these levels, this is the daily chart. That means that anything that is happening, that happened after this moment in time, it's to be taken seriously. Now look where this trend line happened. This trend line actually is connecting the lowest candle after this this volume surge. This lowest level, look where it is, actually is at the highest levels of the volume after Brexit. That is why this is a serious business. Breaking this level will take time, besides the fundamental dynamic levels and all things that we already talked about. And that is very close to the 1.30. Actually, it's at the 1.3050 level. So this is why this will take a lot of time, and we are facing actually very good standing volumes here. Okay, so everything that happens from now on should be closely watched. And yes, the volumes and the structure of the bulls and the bears will be crucial to see how long it takes. If the bulls win the war, how long could take them to break and try to close this gap. This is the gap of the 137 that never was closed. This is the level that the bulls now are eyeing to close this level. So this is a hint for you. If you are looking for holding a bullish bias here, the ultimate level is the 137. After the 137, you for sure will have a take profit here. But well, we need to see what happens. This is the yesterday candle. After that good number today, after that good number yesterday, as you can see, the volume is healthy above. We're still holding the MACD below zero, but look at this. After having this price action, the MACD is starting to point to the upside. The RSI didn't manage to go to the oversold conditions like happened after Brexit. Okay, so actually the RSI handling to stay above the 30 line is a very good signal for the bulls. And the stochastics is now more or less at 50. So we are not having any more convincing signals to the downside. Why? Because of all these reasons. And all these things should flatten from now on because all these resistances. So be prepared to see a reduction of the volatility in the next days. You will find very tough to trade the way we trade after Brexit with these huge candles. Actually, what I believe is that the candles will start narrowing and narrowing in the next days. Okay, let's just check the 1 hour chart. Let's check the 2 hour chart. We have 15 minutes to go. Here are how this 2 hour chart looks and this trend line. So you can see here, if you remember, this trend line could have been drawn in advance. So again, this level is not coincidence. And I've been saying here, the market looks for known zones before major news releases because they find refuge there. So the market found refuge there. I was explaining to some other fellow traders that this latest movement, after having this is Friday, and the market retested this low. But on Monday, we had this sell-off. And I will explain to other fellow traders that this should be the bulls capitulation movement. That means the ultimate movement that for short-term bulls made them throw the towel. But usually these kind of things are followed by a huge movement to the upside. I was explaining that, and it's an explanation in my YouTube channel, personal YouTube channel. You can go there and check it out. That I'm being honest with you, and that I said this before that happening. And well, look at what happened after. We had that tremendous 500% favorable for the UK economy number, PPI number, and look how it reacted. We had another thing why this zone is to be considered seriously as a resistance. Besides being the 1.3 and the 1.3050 is where that candle that was used to that uptrend and downtrend line, that is at these levels. Besides, we're close to that fundamental dynamic level of up. And even though we have a very, very good claimant number, the price couldn't continue to go to the upside. Why? Because all this convergence of things. That doesn't mean that actually that number is going to be taken for negatively for the pound. It's because of this reason. Being a trader is to knowing how to differentiate when the market actually reacts to a data, reacts to a news, reacts to a fundamental, or in this case, a fundamental in tandem and in context with fundamental dynamic levels and important resistances. That is why actually that sometimes you have a very positive number and you have the opposite reaction, but it is because of other reasons that, and you need to have all those elements, consider them to know exactly what the market is doing. Because if not, it's very, very easy that one could misread the price action, okay? So, well, that's how it looks at the 2 hour. Let's just quick check the 1 hour. Just wanted to show you this. This is the latest price action. At some moment here, we had that very good claimant number. As you can see in the hourly candle, we can see a lot of volatility. You can see here how this volume increased. The most likely thing is that this is when we had that very good number. And the MACD, it's above zero. So, well, in bottom line, we are going to face a narrowing of volatility, a narrow band between 130.50, 190, 129. So just be prepared to see that. But now that you see that we have these fundamental levels, all these kind of trend lines, etc., you can figure out with way more confidence your trades. Okay. What I'm going to wait is today's FOMC meeting minutes. That will shape ultimately how the price will react. After that, I will be able to put in my YouTube personal channel a binary.com trade there. So be sure to subscribe there, because between today, tomorrow, and maybe Friday, I will be in position to decide whether to open a trading and in what conditions. So be alert there. Have an eye on my YouTube channel in any case if you're interested in knowing if I decide to open a binary.com trade here. Well, I believe that's everything for this price action and technical analysis thing. Before going, I'd like to before the questions and answer, I would like to remind you something that I've been commenting in the latest webinars because it's something real important. Binary.com, like 1 month ago, added this shop thing for binary.com. This shop thing is the marketplace where traders, webinarists, developers, and traders get together and find useful tools and a way that we webinarists or developers can approach tools to people to to help them with their trading careers, etc. When you click this, if you haven't gone there, I strongly suggest you to go. You click here, and then this will show up. Here you can buy different things. Here you can buy these nice T-shirts if you like them. Go and try to have a look at least at this binary.com bot. This was uploaded by binary.com. It's actually it's a way that for you that will allow you to build your own automized system using binary.com options. So if you are into algorithmic trading or robotic trading, and maybe you didn't find a way to make that fit into binary.com, well, this is the way. So go and check it out. Here you have the binary.com next generation applications for mobiles, the tick trade application, the web traders that you use every time. These are for free. You have for free some for information here, trading for forex markets, etc. Very nice, informative, and useful information. You can actually find some other developers tools that have costs, etc. Go check them out. If you believe that that could work for you, well, you decide whether to buy it or not. But why this keeps me excited, because this will be the way, I commented that at the beginning of the webinar, this will be the way that if the outcry demand by the fellow traders are wanting some kind of service or something, this is the way we will find to make that happen. So, well, it's something that I really stress when I am stressed out when I deliver the webinars. Go check it out and take a profit of that, because here you can find free information. And it's a shop, but there are free information, so you can go there and etc. I believe it's time for questions and answers. I don't know. I've been said that we don't have any questions so far. If you have a question in the future or about this webinar, etc., you have two options. Throw an email to binary.com and they will be able to send me the request, the question to me, or even better, in my YouTube channel, just type a comment in one of the videos and we can start interacting there in a much more personalized way. So I would like to thank everybody for showing up for this webinar. I hope that the information delivered here will help you to develop your very own trading decisions, and that you find something here interesting for you for your personal analysis. And remember that next week at the same time and the same place, I will be delivering the WoW Trades webinar. Remember that every Thursday of every month I deliver a Spanish webinar. So if you're into Spanish, if you like Spanish, if you speak Spanish, you can go there and have a Spanish view of all this. So again, I would like to thank binary.com for allowing me to approach my insights for you, all of you fellow traders, through this channel. And I expect you the next week. And as always, I wish you all to trade safe, be safe, and bye-bye.